Stocks struggled today as economists grappled with the Delta variant of COVID-19. We also had some impact from a big storm on the east coast of the United States. We saw interest rates dropping in a pretty big way. And of course, continued news from China regarding a recent IPO. So we'll discuss all of that, see what it means for our posture, and then we'll take a look at a trade application example where I wanted to once again focus on a CRISPR-related stock as a bullish trade example. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee, and it is July 8th, 2021. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe on our channel, and then go down below. Click on the description area to sign up for our email distribution list. We're also heavy users of Twitter. I would encourage you to follow me at Brandon Van Zee if you're not doing so already. And we really appreciate those of you that click like and retweet on these Market Outlook related tweets. And then last but not least, we have a presence on Facebook. If you're not doing so already, feel free to join us at the web address you see embedded in the logo in front of you. All right, let's go ahead and get into today's trading activity. And as you can see here, I've got chart 4B pulled up here in front of us. Reminder that if you are a premium member of Market Scholars, you get access to all 50 plus of the charts that David and I use for these presentations and in our various trading rooms throughout the week. So that is a key feature for a premium membership as opposed to the plus membership. Anyway, this is chart 4B, and it's a 4-grid that will basically show us the 4 major U.S. equity indices side by side. So that way we can kind of try to get a sense of whether there's any differences taking place out there. And we usually get started here in the upper left with the S&P 500. You can see it was down 0.86% here today. You can see that we are just one day removed from an all-time high, which was just yesterday. So while today felt like a little bit of a jolt and felt a little panicky at times, we have to remember that we are still in a significant uptrend and nearly at an all-time high. So, that's a positive news there. You can also see that the background color of the chart remains green. So despite a fairly significant pullback today, the uptrend is holding. We are above the rising 30-day moving average, and the intermediate trend or posture remains strongly bullish. You can see that we did have a long lower shadow here today, and that signifies that the bulls were interested in purchasing some of the merchandise that had sold off earlier in today's session. That is generally perceived to be a positive sign. And you can see that that is a feature for most of today's candles across the other indices as well. Nice long lower shadow there on the Dow Jones, and a nice long lower shadow down there on the Russell 2000 as well. With the Dow Jones, we were down 0.75% here today. And like the S&P 500, we remain trading above a rising 30-day moving average, and we continue to have a strongly bullish posture for the time being. Now, unlike the S&P 500, the Dow Jones has not hit a new all-time high since back here on May 10th. And so the Dow Jones has been a bit of a laggard compared to some of these other indices that we're looking at here. This market has mostly been led higher by a lot of the big name technology oriented companies. Stocks like Apple and Microsoft have done quite well in recent weeks. And then here in the last couple of sessions, we've really seen Amazon really start taking a big move higher. And so all of those types of stocks have particularly helped the NASDAQ composite, where you find a lot of those big growth-oriented names. You, of course, also see Apple and Microsoft in the Dow as well. But generally, when you're thinking of big tech and the leadership of big tech-oriented investments, you think of the NASDAQ composite. And as you can see here, the NASDAQ composite, like the S&P 500, is just one day removed from an all-time high. The NASDAQ composite was down 0.72% today, so it fared a little bit better than what we saw with the S&P 500 and the Dow Jones Industrial average. Like those other two, we also have price above a rising 30-day moving average. Remember, we know that from a color-coded perspective because the moving average color is green in this case. So all three of those continue to have strongly bullish intermediate postures according to the market forecast technical indicator, and all three of them continue to trade above a rising 30-day moving average, which is generally perceived bullishly. So, in other words, take a deep breath. Understand that these days happen. They're not all that uncommon, and we should be used to 1%, 2%, even 3% pullbacks are not all that uncommon. So they are just par for the course. They are your entrance fee, so to speak, to the stock market itself. In order to have access to gigantic returns over the long term, you do have to take risk in the short term. And so, I think for the most part, we're still hanging in there just fine, and in uptrends for most of those indices. Now let's talk about the Russell 2000, because there my analysis won't be quite as rosy. This was our fourth straight down day for the Russell 2000. Remember, that's your small cap index. Remember, the Russell indices were the ones that were in the news a couple of weeks ago for doing their annual rebalancing. So basically what they try to do is grab 3,000 of the largest stocks here in the United States. They chop them up into two different categories. They have the Russell 1000 as the 1,000 largest companies of those 3,000, and then the bottom 2,000 of the 3,000 would be considered the Russell 2000. So it's a little bit different than what you might expect. A lot of times it's the bigger named companies that get the publicity, but specifically for Russell, they actually get a lot more publicity around the smaller companies. And so the Russell 2000 has now been rebalanced, and we have the new crop from the past year of some of the MAME stocks and some of the newer IPOs perhaps that launched within the last year that now make up that Russell 2000. And things were going fine up until about 4 days ago, and then we just started this rapid decline right here. And so the good news is this: we did have a long lower shadow there. And again, like I mentioned here with the Dow Jones Industrial Average, what that signifies is that the bulls were willing to buy merchandise at the lows of the session today, and were able to push the price action back up into the upper half of today's range by the time we close the session here today. So little bit of good vibes going into the bell here today, but obviously this 4-day meltdown has been a little bit difficult for some folks because we've lost our trend here, right? We're no longer above the rising 30-day moving average like we've seen here more recently. And not only that, we also breached this prior support level from this 1-2 candle formation right here on June 18th and June 21st. Now, the good news is we didn't hit multi-month lows. We would have to go down below 2132 in order for that to occur. So we're still about 100 points above that. But without a doubt, you can now see that we have a slightly lower high and slightly lower lows ever since hitting that high back here on June 9th. So not a great sign there. Now, the good news is with the other three indices still with that strongly bullish posture, there's a lot more firepower in those other indices because they carry a lot more weight with institutional investors. That's where you're going to find the bigger companies that can absorb a lot of the hedge fund money that's out there. So it's entirely possible that if the other three behave themselves, that the Russell 2000 could very well play a little bit of catch up. If that is not to be in the cards, in other words, if the other markets cannot support this current price action, then it is likely that the Russell 2000 will become the leader to the downside because it's been the laggard to the upside here more recently. So be on the lookout for that possibility there as well. But Russell 2000 seems to be kind of dancing to its own beat right now, more or less just going sideways, chopping sideways over the last 3 months, whereas there's more clearly defined uptrends in the other indices. In particular, the NASDAQ Composite and the S&P 500 seem to be our leaders in this current marketplace. I should mention as well, not only are we trading below this moving average, in the case of the Russell 2000, the moving average is still slightly going higher, so that's why it's painted yellow as opposed to red, but price is clearly trading below it, and you can see that the background color of the chart is light pink, telling us that we have a weekly bearish posture on the Russell 2000. All the other postures are still strongly bullish, but the Russell 2000 is now weekly bearish. Let's go ahead and take a look now at our 3 green arrows status. And as this pulls up here, a reminder of what the background colors are telling us. This is chart 4D for those of you that are premium members following along at home. And the top two charts here have a green background color. And on this particular chart setup, that signifies that both of those charts have what's known as a 3 green arrows signal. In other words, there's 3 technical indicators that are all acting bullishly at the same time. The 3 technical indicators for this particular setup are the 30-day moving average, the MACD histogram, and the stochastic. And you can see that in the case of the Dow, we've got arrow 1, arrow 2, arrow 3 there to kind of confirm that 3 green arrow status, and same thing over here on the S&P 500. So those two, from this particular chart's perspective, still seem to be okay areas to be looking for trend trades. I wasn't in class on Monday because that was the observance of the 4th of July holiday, and so we didn't have our normal classes here at Market Scholars, but normally that's when I teach my trend trading class, and so we'll be back in the saddle this next Monday with new trend trading ideas and see what we can uncover with our top-down analysis at the same time. Now, in terms of the other 2 charts down below, we don't have 3 green arrows on either of those. It's a little bit surprising to me with the NASDAQ composite. We just today got a red arrow on the MACD histogram, and what that's signifying is that we've got a little bit of a loss of momentum as there was a pretty decent pullback from yesterday's high, which remember, we didn't close at the highs yesterday, so from yesterday's high to where we're at today, enough of a momentum pullback to give us that red arrow right there. But we are so close that it could very well be as soon as tomorrow, under the right set of circumstances, when we get that green arrow back. So we don't want to read too much into that. The good news is the NASDAQ remains above that rising moving average. So just be aware of it, but it shouldn't be enough to startle you out of any positions or anything like that. Just understand there's been a little bit of a loss of momentum there. With the Russell 2000, I'm less surprised about what we see here. Here we do have a 3 red arrows signal at this current juncture, and after a 4-day pullback like we've seen here, a pretty healthy one, that's not a surprise in that case to see 3 green arrows on a daily candle chart like we have right here. So loss of momentum according to the MACD, path of least resistance is to the downside according to that moving average, 30-day moving average there, and then we also have the stochastic reminding us that price is not closing near the highs of its recent ranges. And so those are usually considered a little bit more bearish. But, again, looking at this chart, taking everything into context, this is mostly just a sideways chart here. It's not some sort of a vicious, nasty sell-off. It's more just this is a area within the financial markets that's not really participating at the same rate as the others. Keep in mind that the financials are a very important area within the Russell 2000. There's a ton of small cap financial companies out there. Think of your regional and in some cases even local banks that are out there. They're publicly traded in many cases, even if their market cap is only $500 million or $1 billion. A lot of them, the average person in the street has never heard of. But there's a lot of those types of companies that make up the Russell 2000. Financials may very well be the biggest sector within the Russell 2000, or at least one of the biggest sectors. I'm bringing this up because the financials have had a rough couple of sessions here more recently, as we've seen interest rates falling pretty sharply. So we'll talk about that here in a little bit when we get into the sector analysis. But that could be part of the reason why we've seen the Russell 2000 struggling here more recently. Let's go ahead and pop on over to the internet here briefly. I always like to get a chance to say thank you to those of you that help support this project on YouTube. Remember that these YouTube videos are completely voluntary. Like I've mentioned to you guys regularly, as long as I'm getting at least 100 likes on Twitter, I will prioritize these videos. And what I mean by that is I will move other things out of my schedule to do the video the next time I'm scheduled to do it. If I don't get 100 likes on the video, then I won't prioritize it. And in some cases, I may have other things going on. I happen to have my parents in town the last couple of weeks, so I took a few days off there. But just a reminder, do your part if you can to click like for us there on Twitter. It should only take you 5 seconds. So if you value the 2 or 3 hours out of David and I's day that goes into not only hunting hunting down the trade ideas, but also doing the prep work, the research, recording the videos, doing the editing, doing the uploading, sending out the emails, setting up all of the other notifications on social media. There's a lot that goes into this video beyond what you see here that we do. So we ask just one thing out of you. In order to continue to receive these videos for free, simply help support us there on social media, and many of you do a very good job with that. So keep it up. Also, while we're over here, a reminder that we had a great day of classes here today. David taught his ETFs class, and I taught my question and answer session. Tomorrow, David will be teaching his very popular technical analysis class at 1 p.m. Eastern Time. So if you've ever wanted to be taught by a chartered market technician, that is your opportunity each Friday there with David, who does an excellent job with that particular class. Earlier today in my question and answer session, we had some questions about the new Telegram channel. For those of you that are premium members, one of the benefits we give you is that we send out trade alerts via the Telegram app on any trades that we're doing for both the market outlook videos that we do here for you, and then also for our trading rooms that we teach. Remember, we teach four different trading rooms each, so 8 total trading rooms here. So I teach 4 and then David teaches 4. So all of the trades that we do for those trading rooms, we send out alerts, and that benefits those of you who can't attend the class live but still want to know what we're trading, so that way you can participate if you so desire on your end of the equation. So since we had kind of our big 3-year anniversary here more recently, we set up a new consolidated channel that will allow you to see all of our trades in one Telegram channel as opposed to 2 separate ones like it used to be. Also, I got a question on the Editas trade that I did here in the Market Outlook video here a few weeks ago. That stock has done tremendously well. I think when I presented that idea, it was a $35 stock. It eventually went up and through 50. And so that opened up another question about how to manage that, because that was a long call trade at its core, but we also sold a $50 call against it to try to offset some of the costs of that call. And so we walk through some of the possibilities here today in terms of how to manage that type of a trade if you're interested in that discussion. Claire asked me about WTRG's business model. And so that is Essential Utilities. It's a water utility company, thinking about it from a dividend growth investing perspective. So we went through a bunch of fundamental analysis on that company, and I actually learned something about that company in regards to a recent acquisition that they made. Also got a question about what to do with spin-off companies. Recently we've had spin-off companies from Merck and from DTE, the big Detroit utility company. And so we had a kind of a high-level conversation about how you can handle spin-offs and some of the considerations there. And then also had a question about where do we go to find news about a company, and you know, if it's moving big in one day, what are some different resources that we can tap into to try to figure out, you know, if there's legitimate news out there, or even in some cases where to find rumors. The rumor mill can sometimes remind us that where there's smoke, there's fire. And while rumors aren't always going to be proven true, sometimes they can give us a little bit of a inside edge there before everybody else catches on to it. So we had that conversation there as well. So feel free to check out that recording from my class today if you are a premium member. Remember, Plus members do not have access to that particular question and answer session. Our Plus members do have access to all 8 of our trading rooms, but this is a different type of a class here called a question and answer session, and it's only our premium members that can access that. Also, here in the last couple of days, I posted the dividend growth investing announcements. Now remember, that's something that you guys can access even if you're not a member of Market Scholars. So there's some areas of our website that you can access for free. Dividend growth investing increase announcements are one of those areas that you can check out. And so in order to access that, a lot of times you can kind of see them over here in the popular recent posts if I post it recently. So you can see it here over on the right hand side, so you can click on it from there if you're in the blog area of our website. Otherwise, you can come down here to our categories area, click on dividend growth investing from there, or you can hover your mouse over blog and just go to dividend growth investing there. So a few different ways to figure out how to find that. But this will detail all the companies that raised their dividends last month, so in the full month of June, that had previously at least 5 years in a row of dividend increases. And we had a lot fewer total dividend increases last month than we were used to in prior months. But what I will say about this particular crop is that we had a lot of big dividend increases. We saw Jefferies Financial, as an example, with a 25% increase. We saw Matson with a 30% increase. We saw Sony with a 19% increase. We saw Target with a 32% increase. United Healthcare with a 16% increase. So some pretty decent increases there. If you want to kind of sink your teeth into that data, feel free to check out that link on our website at marketscholars.com as well. All right, let's get back on over here to the Thinkorswim charts. And let's review some other information. Let's do some 12 grid analysis now, starting with chart 5A. And on this particular chart, a reminder that these 12 grids will show you what the posture is of the market forecast technical indicator, specifically the intermediate line. And if it has a bullish posture, the background colors will be green. If it has a bearish posture, the background colors will be pink. So this first set of 12 grids here will kind of give us, a nice broad view of a lot of different markets, whether it's fixed income or commodities or stocks or what have you. I think one of the big stories of the day is what I had mentioned earlier, which is the U.S. Treasury yield really fell again. And this has been a really ugly spillover here in the last week or so with Treasury yields. You'll recall that in last month's inventory, I did a bullish TLT trade when we were trading kind of around the moving average. I would not have guessed at that time that TLT would have rocketed all the way up here, way above this moving average. I'm glad I did the bullish trade, but that is definitely not what I had in mind. It is overshooting in a big way. So remember, those two things work inversely to one another. When interest rates go down, bonds go up, and vice versa. So over here, back to the U.S. Treasury yield in the lower right-hand corner, you can see that we now have had our third straight oversold cluster signal here. And it just seems like it cracks to fresh lows every day. Notice that the Treasury yield, the 10-year Treasury yield, is now at 1.28%. I mean, we were talking about 1.5% not very long ago. So that is going to be a big reason why financials have struggled more recently. Remember, earlier this year, financials were actually leading this market. They were part of that kind of value category that was really kind of surging right alongside energy stocks. Well, the financials have really struggled here lately because of that interest rate sensitivity. Remember, when interest rates are going up, as they were earlier this year, financials tend to benefit, all else being equal, because of the net interest margin that's kind of embedded within their business models. When interest rates fall, like we've seen here in the last few weeks, they then struggle in that type of an environment. So anyway, it's kind of been interesting to watch that kind of play out here in real time. But I'd have to believe that we're going to get some sort of a reversion to the mean type of a move here on U.S. Treasury yields or interest rates in the short term. At this point, I don't think I would be aggressively buying into TLT. If I were forced, I probably would try to do something bearish, to be honest with you. I wouldn't be aggressively bearish because I still think TLT is in an uptrend. But I think we've gone a little bit too far too fast. And I think that TLT probably deserves a little bit of a breather after this massive 4-day rally that we've seen right there. So maybe some of you that are a little bit more ambitious and willing to go kind of against the grain a little bit might be looking at some bear call spreads on TLT there. So I think that was the big story. Let's keep our eye there on interest rates because they do have a big impact on a lot of those other sectors like financials, and then also the opposite impact on utilities and REITs in many cases. In terms of some of the other charts here that caught my eye today, Oil was rather impressive. Oil has spilled over for the last couple of days as well, but really caught a nice rebound here today, at least in the form of USO. You can see that we are bouncing up and off of that rising 30-day moving average. It's generally considered quite bullish if you were to look at this chart. I think most of us, if we went into it without picking sides ahead of time in our head, and that can be difficult in the oil space. As you can imagine, you have people that love it and people that hate it, and you can't convince them otherwise. But if we were to look at this with just a fresh set of eyes, that looks like a bullish chart to me. Whether it stays bullish is anybody's guess. What we do know is that the last time it came down here and touched the uptrending 30-day moving average, it used it as support and bounced off of that. And that happened back here in May. You can see we had a kind of a rough 3-day period back there, and that was actually a time to buy, not a time to freak out and liquidate your oil assets. And so we'll see if that happens again. Part of it could be what's going on with the dollar. Dollar did fall today. 0.4%, but the dollar has been reasonably strong lately, so not a lot of clarity in that particular area. You will notice that gold struggled here a little bit today. It was looking somewhat promising early on in the session as we actually broke up to maybe 2 or 3 week highs, and it looked like we were doing our best to try to go fill that gap on GLD from June 16th, but then we kind of turned tail midway through the session, and we actually finished just a touch lower there on GLD. So decent little reversion to the mean rally after getting that oversold cluster signal here in late June. At this point, I want to be a little bit more cautious as this falling 30-day moving average is approaching GLD. I'd probably be looking more towards the bearish side of the equation at this moment in time. And even though I'm still bullish on gold long term, in the short term, I think that the chart's got a lot of work to do before we see any breakouts to the upside. So we'll keep our eye on that. Part of that might be dictated by what happens with the dollar going forward. Foreign bonds. We're flat here today, but they've had a really strong breakout in the last week, just like U.S. government bonds have. Impressive in that we broke above this high from June 11th. So some of you might be looking at foreign bonds as a different asset class to add to your portfolio if you're struggling with foreign stocks, right? If we look at the foreign stocks, they are really, really struggling up here, whether you're looking at developed foreign stocks with EFA or emerging foreign stocks with EEM. Both of those look really ugly. Now remember, China has been in the news in a big way for the last week or so because of kind of its regulations and shutting down Didi. Didi was this huge ride-sharing app that went public here in the United States to try to drum up some investor dollars, and apparently Beijing did not like that. They in fact had requested that they postpone their IPO, and Didi said, "No, that's all right. We're gonna go ahead and do it anyway." And then came the news that they might be pulling the Didi app off of some of the app stores over in China going forward. I understand that if you have the app already, you're going to be able to keep it, but new people would not be able to download that app until they kind of figure out what they're going to do with the situation. So that's caused a lot of consternation, a lot of nervousness that Beijing is really clamping down on U.S. listed Chinese assets, and that has caused even big stocks like Alibaba and Baidu and others to really struggle here more recently. Remember, China is a huge and important area there within EEM, so no surprise you're seeing that struggling here after all the chaos here in the last week coming out of Beijing. So without a doubt, the U.S. markets look a lot stronger than the foreign markets at this exact moment in time. Let's take a look at the sectors here briefly as well. This will be chart 5C for those of you following along at home. And as it stands here, we kind of got a bit of a mix depending upon what area of the market you're looking at. The overall market continues to have this strongly bullish posture. That's your chart in the upper left. All these other charts are the 11 sectors that make up the market. Something like real estate looks really strong as it's kind of riding that upward trending 30-day moving average. I also like the looks of healthcare, and we'll talk about that here in a little bit with our trade application example. In fact, we had a nice little bonus hit here earlier this morning from our factor-based swing trading class. We were able to shut down our Biogen trade at max gain here today, as it was a rare stock that was ripping to the upside this morning when much of the stock market was down. So there's a number of those healthcare stocks that are perking up nicely, and I think it's helping support the overall sector, as you can see right here. So I kind of like the charts of both real estate and healthcare. Now remember, real estate benefits when interest rates fall, and that's what we've seen here in the last week. Look at the difference of real estate in the lower right-hand corner, and then compare that to financials up here in the top rung, second from the left, and you can see the difference in interest rate sensitivity. Financials have collapsed. Maybe that's too strong of a word there, but they have certainly fallen very, very quickly. Even the big name financial banks and different things like that have fallen very quickly in just 4 days with interest rates falling, whereas REITs have largely gone higher over that span of time. Financials clearly have a strongly bearish posture at this moment in time, and just doesn't have a very good look to that chart. You know, you had that reversion to the mean move higher. You kind of use that area as an excuse to sell off and bounce down and away from that falling moving average once again. So financials looking very, very heavy here. The good news is communications and technology are still holding up reasonably well. Remember, sometimes technology does well if interest rates are falling, just simply because of the way that cash flows are discounted back over a longer period of time for those technology stocks. And so that has maybe benefited them over here in the last couple of weeks. All right, let's get into our trade application example. And again, I wanted to focus here on the healthcare area for this conversation. And I'm going to come on over to chart 3A, and I'm going to pull up ticker symbol NTLA. This is another one of those CRISPR stocks that you guys hear me talk about quite a bit in my classes and on Twitter and what have you. And, like Editas, this is a company that a lot of people on the street, on Main Street USA or wherever you're at, have probably never heard of. Right? These CRISPR stocks are new because the technology in a lot of ways is new. Now, technically, CRISPR has been around within bacteria fighting viruses for millions of years, but we as humans hadn't really discovered it until the last decade or so, and at least have learned to harness it. And so I really think that these CRISPR stocks have a chance to really change the world in a big, big way going forward. And I'm really happy that we were able to capture that Editas trade before this massive move in the CRISPR stocks that took place just a couple of weeks ago. And a lot of it was because of this stock that we're looking at right here. Its ticker symbol is NTLA, and you can see that here on the 25th of June, it was an $88 stock. And then the very next day, which was a Monday, it was a $135 stock. So a massive gap up as they announced news over that particular weekend that they had successfully performed CRISPR gene editing in vivo, inside the human body. Up until that point, much of the research that we had found was pulling blood cells out of the body, working on them in a lab, doing the CRISPR gene editing outside of the body, and then putting those blood cells back into the body to cure sickle cell disease or something like that. So this was a very unique set of information that Intellia was able to announce there when they said that they were actually able to do some of this CRISPR gene editing inside the body. And it's going to open up a whole new set of possibilities for scientists out there. So it really excited the scientific community, and the stock ramped higher in a massive, massive way that day, and it continued to go higher for the next couple of days, eventually topping out at 202. Well, eventually you get a little bit too excited in these names, right? And eventually something's got to give. Eventually this stock did give back quite a bit. So it went from 202 back down here to about 143 yesterday. Today, it showed some promise once again. You can see that this stock was up 5% here today. Not only that, but it was up this morning when most of the stock market was really getting hit pretty hard. So you can see here we've got some bullish indications on the chart. This is what we call a bullish engulfing candle, where today's body engulfed yesterday's body. And that can be a turnaround sign. It doesn't have to be, but it's certainly a positive sign if you're looking for those elements. You can also see on this chart 3A that I've got pulled up here, which focuses its attention on the near-term posture, which is the blue line on the market forecast technical indicator. We emerged out of that lower reversal zone here today with that big move higher as well. So you can see the background color of the chart changing from pink back to blue here today, which is a bullish sign in that perspective as well. And of course, we're vastly outperforming the S&P 500. This stock is up 114% in just the last 3 months of this chart, and of course remains above a rising 30-day moving average here as well. Now the challenge is trying to figure out what type of a trade to do, right? With Editas, when I showed that to you guys, it was on this candle right here. I took advantage of that brief pullback on Editas, and we bought calls because we had, I think that was like an 8% down day there. So I felt like I was buying calls on a discount, and that thing just ripped to the upside after that. With NTLA, it's a different feel, right? NTLA has already ripped higher. Now it's kind of like you're chasing in a way if you're getting involved now. With Editas, we got involved before the good news. With NTLA, we're getting involved after the good news has come out. And so you have to be a little bit more cautious around a situation like that. Long calls are very exciting because they offer leveraged upside potential, but they also have a low probability of success. So you want to use them sparingly. Instead, what we're going to do in this case is what's known as selling a put. Selling a put is a bullish trade, but does not require you to be aggressive directionally. It just requires you to not see the stock completely collapse, and in return, you will receive some credit up front. So what I did in this particular case is I sold the, I believe it was the August $100 put. You can see over here on the chart where $100 is. Obviously, this stock closed at $152 here today. So the stock would have to fall over 30% to get down to 100. And in return, I received $110. So a lot of times I try to focus on that 1% of the credit of the strike. And so when you're, kind of using that as an example, if you were focusing on the $100 strike, then you're saying you want to get paid at least $1. And I think I got paid $1.10 for that. And that translates into $110 came into my account here today. And that's my money to keep. What I give up in return, or the risk that I take, is that I am now on the hook for buying 100 shares of Intelia at $100 per share if it falls there. Now remember, I'm not expecting it to fall there because it would have to drop 33%. But this is a crazy stock. All these CRISPR stocks are crazy because they don't make profits. They have very exciting future potential, but they don't have commercialized products that they are selling right here, right now. So anything is certainly possible in the coming 30 or 40 days until the August expiration. Remember, you also have an earnings announcement there. So in other words, this is speculative, just like it was with Editas. And in this case, you have to be willing to buy 100 shares of this company at $100 per share if push comes to shove and this stock falls $52 in the coming 30 to 40 days. In all likelihood, that's not going to happen. It might fall, but it's probably not going to fall $52 per share. At least I'm not expecting that. It might very well continue to go up. It might go sideways. In all of those scenarios, we get to keep that 1% return on our risk. If it goes down below 100, then we are on the hook for buying those shares. And we'll have that conversation at that time if it comes to that. But this is a way to exercise a bullish idea on a stock that's already taken off without you, so that way you can at least get a little bit of benefit, a little bit of profit along the way, as long as your hunch holds correct. So that's what I had for you here today. I hope you enjoyed the presentation. As I mentioned before, if you want to see us do this video again tomorrow for free for you on YouTube, we ask one simple request out of you. Simply click like for us there on Twitter. So with that, I want to wish you all the best of success with your trades and your investments. Goodbye for now.